Today, Bitcoin jumps as investors keep a close eye on a ceasefire between Iran and Israel, touted by President Trump. Republican senators debut a framework for a major bill that would set the rules of the road for crypto. And Constantine Karides, the lead partner at Reed Smith, weighs in on the rise of Bitcoin treasuries on Wall Street. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices are on the rise after President Trump announced a ceasefire between Iran and Israel yesterday, and investors are waiting to see if that deal holds. Soon after the president announced the pause, Israel's military said that it had intercepted a missile launched by Iran, which Tehran denied, before launching a counterattack. Meanwhile, on the U.S. side, consumer confidence unexpectedly declined this month on concerns about the economy and labor market. By noon Eastern, Bitcoin rose to the $105,000 level, Ether jumped back to the $2,400 mark, and XRP climbed to $219. Okay, let's talk about the top stories. Today, Republican senators unveiled a major bill setting rules of the road for crypto. Now, specifically, the legislation would define when crypto is a commodity or security, allow crypto exchanges to register with the CFTC, and reduce the SEC's regulation of digital assets. The framework was introduced by Senate Banking Chairman Tim Scott of South Carolina and Senator Cynthia Lummis of Wyoming, who heads up the panel's Digital Assets Committee. Now, Robinhood CEO Vlad Tenev was asked about this regulatory development for crypto this morning while joining CNBC's Squawk Box.
I think it's a big thing because if you look at crypto right now, over the past 4 years, the really interesting, high potential things in crypto have all been pushed overseas. So we're actually doing an event next week in the south of France, our first big crypto event, our first big international event. And one of the messages is Europe's actually ahead of the US at this point. So it's rare that America has to catch up in a frontier innovation industry, but here we are. So I think these bills provide much needed clarity for builders to actually bring back a lot of that innovation in the US, make it available in our home market.
This afternoon, lawmakers in the Senate Banking Committee's Digital Assets Subcommittee will conduct a hearing entitled Exploring Bipartisan Legislative Frameworks for Digital Asset Market Structure. Witnesses include a Coinbase executive and former CFTC Chairman Rustin Benham. Next, Visa CEO Ryan McInerney weighed in on the advancement of the Senate's Genius Act stablecoin regulation bill. He told CNBC's Squawk on the Street that the credit card giant has been embracing stablecoins.
We've been embracing and building for years, preparing for this moment. The Genius Act has now passed the Senate, as you know, and is expected to pass the House. I think that'll give regulatory clarity to stablecoins. And we've been embracing stablecoins. We've been enabling people to issue Visa credentials on top of stablecoins. We've been modernizing our own settlement infrastructure with stablecoins. And we have a whole host of innovations that we plan to deploy around the world embracing stablecoins.
After the Senate passed the Genius Act last week, marking the first major legislative win for the crypto industry, the bill now heads to the House, which has its own version of stablecoin legislation dubbed Stable. Now, both bills prohibit yield-bearing consumer stablecoins, but are different as to which agency regulates what. Finally, crypto company Digital Asset raised more than $100 million in funding from several big names in banking and finance. The company said today that it netted $135 million in a funding round backed by Goldman Sachs, BNP Paribas, and Ken Griffin's Citadel Securities. The firm, which touts itself as a regulated crypto player, said it will use the funding to advance adoption of the Canton Network, which is a blockchain for financial institutions. The investment highlights how major financial firms are embedding themselves into the once obscure crypto world. All right, turning to the rise of Bitcoin treasuries for our main story. Anthony Pompliano announced yesterday that he was taking ProCap, a financial services company that plans to hold $1 billion in Bitcoin, public via SPAC. It's just the latest in a slew of publicly traded companies acting as Bitcoin investment vehicles. Constantine Karides, lead partner at Reed Smith, has helped a number of these firms enter the public markets, and I spoke to him about this trend. Constantine, thank you so much for joining us. You've been representing a lot of these new Bitcoin treasury companies, and just yesterday, Anthony Pompliano launched ProCap. And I want to start with that announcement and have you explain what makes the legal structure of ProCap different from some of the other Bitcoin treasury companies still waiting to close or file their S4s.
Sure. Thanks for having me. Yep. So this transaction allows Pomp and the new entity that's formed to buy Bitcoin before the actual close of the transaction. That's very different than the other structures that have taken place today. We came up with a pretty unique approach that allows that to happen by using the SPAC structure as a way to kind of be a little bit more flexible and with a little more speed.
It's also been fascinating to see this rise of the reverse merger as a way to take some of these Bitcoin treasury companies public, almost like taking some of these zombie companies that haven't really been doing much in public markets and then turning them into these Bitcoin investment vehicles. Can you talk to me a little bit about that trend?
Sure, absolutely. It started with our client Nakamoto and David Bailey, who together with us came up with a novel approach then, which was to take a private company that has a certain level of operations and identify perhaps a company that's not doing as well as it could, that's publicly listed, and then merging that the private vehicle into the public vehicle to create a new company with a new approach. In this case, the rollout of a Bitcoin treasury strategy, which at that point was the largest such raise, and which I think is going to be a very successful venture as well.
And talk to me about how you identify some of the companies that you partner up with for these reverse mergers. In the case of Nakamoto, for example, Kindly MD was focused on cannabis.
Yeah, it's definitely an interesting way for these deals to get done. Those shells are typically identified by the investment bankers that are on the deal. So they scan what's out there. They look for certain market size. They look for certain identifying features that will allow for an easier transaction to get done. And when they do, they reach out and they try to negotiate a transaction that allows everybody to win. The public company by giving a new lease on life, in effect, and the private company by allowing its strategy to come into the public markets and take advantage of all of what that means.
And then going back to ProCap, why a SPAC in this case, but then reverse mergers with some of the other deals you've been working on?
Well, in this case, first of all, SPACs provide flexibility and speed, which was very much at the forefront of Anthony's thinking here. In addition, we came up with a structure that would allow the equity to be raised and the Bitcoin to be bought before closing, which is a new development in this space. And given where Bitcoin might be in 5, 6, 7 months, getting into a position to be able to buy Bitcoin was a really, really great outcome for the investors and for the acquiring entity here.
And how did you get regulatory comfort around the fact that ProCap is purchasing Bitcoin immediately, even before the merger closes?
Well, the SEC has been very collaborative in these situations, I would say, over the past several months. We explained the regulatory risks. We went through it with them, and I think they got comfortable understanding, one, that Bitcoin, first and foremost, is not a security, and second, is an asset class that is developing quite quickly, and as such, there needs to be an approach that allows the Bitcoin to get into the treasury in a kind of meaningful and expeditious way. So they were very cooperative, and I think knocking heads together, we all came up with solutions that work, are regulatory compliant and appropriate for this industry.
Now, unlike Trump Media or 21, ProCap plans to offer lending, trading, and capital market services, all denominated in Bitcoin. What were the biggest legal hurdles to get that stack approved?
Well, I mean, some of that's to come. The different activities that are going to be rolled out by the SPAC, by the new entity, will have to be understood from a regulatory compliance standpoint. We don't see any issues with that. The fact is that Bitcoin staking is very prominent right now. The fact is that Bitcoin derivatives trades goes on all the day through a number of different exchanges. And so the activities that the new entity will engage in are already proven to be legally compliant.
Does this model, a Wall Street-style holdco built on Bitcoin, open a new category of regulatory interpretation for securities law?
I don't think so. I think the way that these deals are getting done are very much thoughtful around the regulatory regime that's in place and which needs to be navigated in order to come out with a structure that works. So getting to closing, in my mind, provides all the comfort around that issue that you would otherwise expect.
Now, you advised on the Trump Bitcoin Treasury and the Nakamoto Fund. What do these deals have in common legally, and where does ProCap push the envelope further?
Well, I think they all have in common, at a higher level, a development of Bitcoin as an asset class to be held on public companies' treasuries, not just with respect to the companies that we're mentioning, but more broadly. So I think it's the beginning. I still think we're in early stages of that widespread adoption by public companies holding Bitcoin on the treasury. So they all have that in common. In terms of the difference in the ProCap transaction, as I mentioned, being able to acquire Bitcoin before close is a really significant development, and one that I think will be probably followed by others who are looking to do similar transactions. And it was good to be able to come up with that structure working with the bankers and Pomp.
Last question for you. Just broadly speaking, we've seen this surge of Bitcoin treasury companies either going public or existing companies adding Bitcoin to their balance sheet. Is this just the beginning, or was this kind of the backlog of entities that wanted to take this kind of step, and now we're winding down?
I don't think we're winding down. We're seeing a lot of demand in our pipeline from clients who are looking to do similar trades. I do think that Bitcoin, whilst very much in the public domain, and everyone's talking about in these deals, giving it a high profile, has a lot of room to grow in terms of being an asset class that is part and parcel of every public company or private company's treasury. So I think we're in the early days in terms of that. I don't think we're in a bubble. I think here you have a strategy or a transformation of the way companies think about their balance sheets that will go on for some time as more and more adopt that trend.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.